Hey everyone, back with me again in this channel. Don't forget to share, to like and to subscribe. Fed policy and crumbling market sentiment could send the total crypto market cap back under $1 trillion. Data shows investors jumping back into fiat and a lack of bullish leverage in the crypto market suggests another correction is in the making. The total crypto market capitalization broke above $1 trillion on July 18th after an agonizing 35-day stint below the key psychological level. Over the next 7 days, Bitcoin or BTC traded flat near $22,400 and Ether or ETH faced a 0.5% correction to $1,500. Total crypto market cap USD billion source TradingView. The total crypto capitalization closed July 24th at $1.303 trillion, modest 0.5% negative 7-day movement. The apparent stability is biased toward the flat performance of BTC and Ether and the $150 billion value of stablecoins. The broader data hides the fact that 7 out of the top 80 coins dropped 9% or more in the period. Even though the chart shows support at the $1 trillion level, it will take some time until investors regain confidence to invest in cryptocurrencies, and actions from the United States Federal Reserve could have the largest impact on price action. Furthermore, the sit and wait mentality could be a reflection of important macroeconomic events scheduled for the week ahead. Broadly speaking, worse than expected data trend tends to increase investors' expectations of expansionary measures, which are beneficial for riskier assets like cryptocurrencies. The Federal Reserve policy meeting is scheduled for July 26th and 27th, and investors expect the United States Central Bank to raise interest rates by 75 basis points. Moreover, the second quarter of U.S. gross domestic product, or GDP, the broadest measure of economic activity, will be released on July 27. $1 trillion not enough to instill confidence. Investor sentiment improved from July 18th, as reflected in the Fear and Greed Index, a data-driven sentiment gauge. The indicator currently holds 30 out of 100, which is an increase from 20 on July 18 when it hovered in the extreme fear zone. One must note that even though the $1 trillion total crypto market capitalization was recaptured, trader spirits have not improved much. Listed below are the winners and losers from July 17 to 24. R-Wave or ER faced a 20.6% technical correction after an impressive 58% rally from July 12 till 18 after the network files sharing solution surpassed 80 terabytes of data storage. Polygon or Matic moved down 11.7% after Ethereum co-founder Vitalik Buterin supported the zero-knowledge rollups technology implementation, a feature currently in the works for Polygon. Solana or SOL corrected 9% after the demand for the smart contract network could be negatively impacted by Ethereum's upcoming migration to a proof-of-stake consensus. Retail traders are not interested in bullish position. The OKX Tether or USDT Premium is a good gauge of China-based retail crypto trader demand. It measures the difference between China-based peer-to-peer or P2P traders and the United States dollar. Excessive buying demand tends to pressure the indicator above fair value at 100%, and during bearish markets, the market over is flooded and causes a 4% or higher discount. Okay guys, maybe that's all from me in this video. Thank you for watching. Don't forget to share, to like, and to subscribe this video.